Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about my favorite video gaming stocks. Video gaming is a very trending market, and because of the shutdown, a lot of people are really opting to do video game. And from the projection perspective, revenue is going to top 159 billion already in 2020. This is already over, and also according to Grand View research, this is going to go only upwards. So at a CAGR of 12.9% from 2020 to 2027. And also there's innovation both in hardware as well as software. And next trend is really cloud gaming. So everybody wants to do cloud gaming, and this will really give opportunity for the multiple players to work together or play together in multiple locations. So with all these trends going on in the mobile gaming, I feel very confident to really invest in this market, and there are very nice companies that we can invest in. So with that, let's look at some of the companies and see where we can invest in. So these are the top companies in this area. I will start with the ones in the bold. D9 Limited. Um, this is a China-based company, and there is a BILI Bilibili Inc. Again, China-based company. C Limited. It's Hong Kong. Gravity, Turtle Beach, Skillz, Corsair. This is a picks and shovels play. DouYu, SciPlay, Unity Software, NetEase. Take-Two is also very good. GLUU Mobile, Zynga, GigaMedia, Activision Blizzard, HUYA, Super League Gaming, Inspired Entertainment Inc. And even EA or Electronic Arts is also very good. So with that, let's dive into some of these companies' profile and go into a little more details. So first is the 9 Limited NCTY. It's a very low market cap company, around $552.92 million, and they're into massively multiplayer online games, and based in China. And the stock is about 62.42. As you can see, it did nothing for a while, but suddenly went up. So I would give a little bit time for this to cool off and then buy. And from a revenue perspective, they are pretty consistent, as you can see here, 87, 87. But the revenue year over year also went up, mainly because we are looking at a lower base, so that's why the numbers look very nice here. And they also on the gross margin side, they made some positive gross margin, and the net margin itself is negative right now, so companies are not making money yet, but it's a initial startup type company, and stock just went up. I would wait for this to cool off a little bit and buy some. Next one is Bilibili, ticker BILI. It's a bigger company, about 49.03 billion, and they're into online entertainment for young generations in China. And this is a very nice company. As you can see from the stock chart, stock is really doing very nicely, and they have their stock price is about 141, and very good amount of cash, and they have some debt also. From a market cap perspective, you could see market cap acceleration here, 6 to 7 to 16 to 14, now all the way to 49. So this really shows this company is really gaining popularity, grabbing market share. And the revenue itself, as you can see here, is really doing very well year over year. They're into 65, 66, 63, 76, 85. Really nice pattern here. And they seem to be putting up very nice revenue numbers. And they're surprising Wall Street on the revenue all the way. And EPS perspective, they're still negative. And they did surprise on the negative side two times. Gross margin is pretty healthy, and net margin is negative. They're still not making profit, but still they're the year over year revenue double digits, gross margin double digits. I would really recommend investing in this stock, given in China the younger generation is really picking on these mobile games. Next is SEAC. It's a Singapore-based company. It's a giant, as you can see, 135 billion dollar company, and they're into internet and mobile platform. 79% approve the founder and CEO. It's good to see a founder-led company are doing really well. And they got huge amount of cash on their balance sheet, 3.55 billion, and debt is 2.15 billion. Stock has got very good chart here, as you can see here. They have done consistently well, despite of being a huge company. And from a market cap perspective, very good market cap acceleration. That's what I want to see in a company. And from a revenue perspective, they've been putting up, higher 50 range, 58%. It went to 93% here, but overall pretty positive double-digit revenue growth year over year. And they've been surprising Wall Street on the revenue front. And on the EPS front, they are surprising on the negative side. But for a growing company, that's understandable. And their double-digit gross margin here, 22, 33, very nice. And they're still investing in their own business, so net margin is negative. So what I look for, these type of companies, especially in growing companies, is double-digit market, the revenue growth, a pattern to see it's consistently growing, and a double-digit gross margin, and a pattern to see, it's not fluke, it's not one time, there is a continuation pattern. So with that, let's look at next set of three companies. Next is Gravity. It's a South Korea-based company. As you might be knowing, South Korea is one of the places where there is a lot of people playing, mobile games. In the beginning, it overtook US, but now US overtook South Korea. So with that, they're into development of publishing of online games. It's a smaller company, as you can see, but it's doing very well. Stock price is about 139.48. Chart is really nice. They have some bumps along the way, but very very nice chart. And even now, it came down a little bit. Good time to invest in this company and keep it for long term and keep the stock growing. And if you look at the revenue itself, they're pretty consistent from a revenue perspective. 40, 42, 63, very nice revenue pattern here, and positive year over year revenue. They as you can see the pattern here, 45, 54 became even less, 13%. Now it's positive, which is a good trend to see. From an EPS perspective, they are a positive EPS, which is good, and gross margin itself is really pretty healthy, and net margin is positive, meaning they are making money right now. So with that, both revenue, year over year revenue being double digit and positive, and very good gross margin, I would really recommend this stock to add to your portfolio. Next is Turtle Beach. Turtle Beach is really a picks and shovels play. This will provide some of the hardware for the basically gaming accessories. $493.22 billion company, which is not huge. It's about smaller company here. Stock price is also 32.47, which is on the lower side. 87% approve the CEO. That's a good number here. And from a stock chart perspective, this chart has got its ups and downs, as you can see, but overall it's a good stock to invest in. From a market cap perspective, these guys are a little bit steady Eddie type. They've been 136, 90, 214, 276, now 493. It's showing a positive trajectory here. Stock is doing really good from a market cap perspective, and revenue also, as you can see here, they're on a positive revenue trend here. They had negative revenue a little bit year over year. Now they're positive, which is good. And they have provided positive surprise to Wall Street on the revenue front as well as on the EPS front, which is good. And gross margin is positive, double digit, very nice. And net margin is positive. So with that, by looking at this pattern of year over year revenue growth and good gross margin, I would recommend this stock also. Next is Skillz, SKLZ. It's a $13.26 billion company. Stock price is about 35.83. Pretty recently minted company, as you can see here. It's a nice company. and 85% approve the CEO here, Andrew Paradise. They're into marketplace platform, helps the players the discovery of mobile games. So with that, it's a little bit initial kind of company. Don't have too much history behind it, but good, very good company to invest in. Next, we look at last set of three companies, Corsair, CRSR, about $3.56 billion company. This is again a picks and shovels play. They're into the high efficiency memory and power PC cases. This was a very good DRAM company before. Now they're into mobile gaming accessories. 64% approve the CEO here, and stock price is about 38.73, and market cap is about 3.56. So there is a lot of room for this company to grow, and this company also has to effectively compete against companies like Logitech as an example, and some of the smaller players in that area. So with that, market cap is about 3.33 billion, which is nice. Now it's 3.56. They really, nice chart here. Very good acceleration as you can see here. And, they've been surprising Wall Street on the positive side. And they got gross margin about 7.95, which is again 27% gross margin, 7.95 net margin, which is a good sign here, at least a good start for this company. I would invest a little bit here and see how the company does. Next is DouYu. DouYu is a China-based company, and they're into game-centric and live streaming platform. It's a $5.11 billion company, and this company is really stock price perspective very low stock price, 15.93. And this company has got its ups and downs as you can see here, but overall year over year revenue growth is very nice, 45%, and gross margin is double digit. Being a lower price stock, and in a China and a gaming market, I would really recommend buying this stock too. Next is SciPlay Corp, SCPL. They're into they are developer and publisher of digital games, and a lower market cap company. Stock price is about $20, and 98% approved CEO Josh Wilson, which is a good number here, very nice number. And stock is steadily going up. There some ups and downs, but nicely overall going up. And revenue itself, there is a positive year over year revenue growth. There is a positive market cap acceleration, which is good, and gross margin also very healthy gross margin, and they also have a positive net margin. Overall, this is a good company, low stock price, low market cap, and very good. It has a very good room to grow. So with that, let's now look at the list of these companies, and look at some of these numbers. So this is the entire list of 25 companies, and the ones that are highlighted in bold are my favorites. GameStop, I would not invest at this point because it went up so much with this whole Reddit and short squeeze type situation. But other companies are really good to invest in. And some companies, if you see here, I did not highlight the Take-Two Interactive and Electronic Arts, mainly because the revenue growth, if you see here, it's negative. And for Electronic Arts, it's 5%, but the performance is a little bit low. But I love these two companies also. They're also great companies, along with the newly minted companies. We have some newly minted companies here also, like Unity Software as an example. It's a good company, just a startup. So with that, let's look at the monthly performance of these companies and see what the pattern. So GameStop, clearly it's a huge short squeeze. People kept buying, so I would not invest in this at this point. January it had 1,625% stock spike. So I would let it cool down a little bit, even though it's a it's a cycle that most of the mobile games are being released, but and many of these hardware gadgets are being released. I would wait a little bit. Other stocks, I think they're in a good pattern. Maybe things like NCTY, I would wait a little bit. As you see here, huge growth acceleration in January and February, I would wait a little bit. But other stocks are pretty steady, Eddie. BILI and SC, these are two nicely, very consistent pattern, very nicely going up. Gravity, as you can see here, they came down a little bit after the earnings, but I would add at this point it's a good time to buy. Others are pretty steady, Eddie. Unity came down because I think Apple had some news around not letting basically have people select whether they want to provide their information. So that's why Unity came down, and I think Facebook also came down. But overall, I think these are good companies. I would also buy Take Two at this point because they're down. Very good company, and nice performance as you can see here. So with that, let's go to next set of companies. GIGM, again, nice acceleration. I would buy. Activision Blizzard, very steady Eddie stock here. A little bit less from a stock appreciation perspective, but it's an overall steady Eddie stock. And then we got some of these smaller companies. They're into over-the-counter market. They trade pretty widely, but things like SGA, MY, CCO, EY, they're also pretty good if you want to trade in and out. And Nintendo is also very good. They're into some of these video gaming side. Very good company. So with that, now, now let's go into a little more detail of these stocks and take it from there. So from a summary perspective, I would really recommend you to look at these companies in the bold. These are good investments, and you can really hold them for a while and let the stock run and take it from there. With that, thank you very much. Happy investing.